quite one. Okay, this is good stuff. Stocks to avoid, the high valuation, high growth tech and media stocks. And I would love to talk about Facebook, Netflix, Amazon, and also some of the other assets out there. Again, we filmed a video before this where we go deeper into your trading strategies. The link is below, londonreal.tv/Rickards. As you can obviously see, Jim is very well knowledged in these things. Talk to me about these Fang stocks.
Right.
Because there's something that you've got an interesting take on.
Well, every day or almost every day, if you turn on our business media, CNBC or whatever, stock market at an all-time high. Well, maybe by, a small fraction of 1%, but basically stocks today are about where they were in January 2018. Stock market has gone nowhere in almost 2 years. Now, it had a crash in February 2018, and then it rallied back in the spring. And then we had another crash between October and December 2018, and then it rallied back in early 2019. We've had so there's been volatility. And if you have, perfect clairvoyance, you know how to buy low, sell high every time, good for you. But the fact is most Americans are passive investors, buy and hold investors. They buy index funds, et cetera. They ride out the roller coaster. And guess what? They haven't made any money in almost 2 years. So this is signaling. I don't think technical analysis has a lot of predictive value, but it has some. And when you see these multiple, hits the top, it goes down, hits the top, it goes down. So what's behind that? People don't realize the extent to which stock trading is automated, is not just automated, but robotic. So when I say automation, you're a seller and I'm a buyer, and we put our orders in and the system matches us up and we both get confirmed. That's been around since the 90s. That anonymous order matching technology has been around since the 90s. That's not what I mean. What I mean are robots are actually making the buy and sell decisions. Forget about the execution. They're looking at, they've got pre-programmed algorithms. They're reading massive amounts of data, speeches, 10Qs, 10Ks, whatever. Newspaper articles, on and on and on, and they're making decisions independent of any human judgment. Well, that means you need an algorithm. Who writes the algorithm? Probably some 27-year-old engineer from South Asia who lives in Silicon Valley and doesn't get out enough. In other words, people who have never been to the stock market, never worked in real markets, and they kind of do what they're told, and they're good developers and good coders. So one of the best ways to make money right now is to actually front run the robots. What you have to do is figure out what the algorithm is, and then just sell out before they sell and buy in before they buy. But everything's stuck in a range. The Dow Jones Industrial Average is kind of between 24 and 27. Yields to maturity on the bond market until very recently it broke out, but they were between like 2 and 3. Gold was stuck between 1250 and 1350. Right. Everything was in a very narrow range because the computers say, when Dow hits 27,000, sell them, and when it hits 24,000, shoot them in. Now that lasts until it doesn't. There can be exogenous inputs that cause things to break very severely, and that's where the ceiling comes in. Why have we not broken through the ceiling? We don't have the growth. Earnings are down. Interest rates are coming down. That's good, but they're coming down for the wrong reason. They're coming down because growth is slowing down, and we have disinflation, which is not bullish for stocks. So I look at that and say, this is what I call an asymmetric trade. You have very little chance of stocks going a lot higher and a very good chance of stocks going a lot lower. They might not go lower, but if you're, if you short them, you're not going to, and they just kind of sit where they are, you're not going to lose money because they're not going to go up. But when they go down, you make a lot of money. And the most likely candidates are the ones I mentioned, the so-called FANGs.
Yeah, what are the FANG stocks?
Facebook, Apple, the other A is for Alphabet, which is Google, or actually, I guess G for Google.
And for Netflix.
Yeah, and for Netflix, and Amazon. So it's Facebook, Amazon, Apple, Netflix, and Google, although it trades as Alphabet.
Right.
So that's FAANG. They're all good companies. They're all going to be around, but they're grossly overvalued. And if things head south, they'll head south faster than everything else.
Brian Rose here, founder and host of London Real. If you've ever wondered what's going on behind government's closed doors and how do insiders capitalize on hidden moves triggered by these secret decisions, then I have something you need to see. Jim Rickards is a former CIA operative and world economics expert. He and I recently sat down to discuss all of this on London Real. And now he's sharing a 15-year-old government secret, one that could legally put thousands of dollars in your pocket.
After 15 years of secrecy, I'm revealing the sensitive information on camera.
He's giving London Realers exclusive access to this private broadcast, where he'll go on camera and reveal all the details behind a secret that could affect thousands of people, starting this coming week.
Simply put, the brief revealing video below could change how you think of me. I hope you understand. Click below to see it.
All you have to do is click the link below or go to londonreal.tv/Jim and sign up. Then we will send you all the details to gain access. It's totally free, but if you don't sign up, you'll never see it. And because of the nature of this event, you'll understand why Jim can't keep it online forever. So don't miss your chance to find out the secret and potentially make profits from it. Click the link below and I will see you at the free training.